Hey everybody, I'm Mike Solomon. I'm the broker in charge here at Coldwell Banker Advantage in Fayetteville, and I have a special guest this morning. Heather, why don't you introduce yourself?
Hi everyone, I'm Heather Wilson with Alpha Mortgage Advantage in Fayetteville, North Carolina, and I'm so excited to be here.
Yeah, no, special guest, absolutely excited, and I hope you tune into some of our other videos, but we just want to talk real estate today. So first, like I said, this is Heather with Alpha. Tell us a little bit about yourself first.
So personal life, I am married for a long time, a mom of 2, and now a grandma of 1. So that's super exciting. That's like the new thing in life.
Still can't wrap my head around grandma.
Yeah, well, I mean, it is a work in progress, but he's perfect. So I'm trying to get to his level. But so that's personal life. In real estate, so I have been in mortgage financing for over 20 years in some form or facet. So I feel like we've seen so much of the ups and downs. It's been crazy, but I love it. That's all I've ever done. So that's just,
When you say some form or facet, what kind of things have you done in there?
So I actually started off 12 years old answering the phones at my parents' mortgage company.
Wow, so you got it young.
Yeah. We didn't really do summers going away for like long periods. I mean, I went to work.
From school, you can go to work.
Yeah. I went to work every day after school, and then in the summers, all summer long, and answered phones and did such as that, and got my loan officer's license when I was in college. So I processed loans. I worked from receptionist to processor.
Okay.
Did that in high school. Then did that in college while I was getting my degree.
So in the lending world, obviously you need to be licensed to, and you said you did it for processing. What do you mean by processing?
So processing is basically the back end of whenever you're purchasing a home as far as the paperwork is concerned.
Okay.
So you don't technically have to be licensed to be a processor, but I was required to do that just in case, because just for compliance. You don't want to talk numbers with people when you're not licensed. That's against the rules for sure. So I got that in college, which I actually got a psych degree for, counseling in college.
Obviously, I know Heather really well.
Yeah.
And every time I sit down and do one of these, I did one with one of my dear friends the other day that we've been friends for almost 20 years. And she was saying some things I didn't know. So I didn't know that you have a degree in psychology.
Yep. Okay. And then with a concentration in counseling, which I think has really served me well.
I was just about to say, I think that probably help in our business.
Yes, it does. It helps me. It helps me with agents. It helps me with the customers. But that's what I did. And I didn't plan to make this my career. And I got married very quickly after I graduated college, and my husband was like, you got to make some money, girl. Yeah. And so it just kind of went from there. I assisted other loan officers. I was a loan officer assistant, and then I decided to go on my own. It's probably been, I don't know, over 10 years that I've been doing this part. And I mean, I love it.
So it's kind of like you've worked in all the aspects of lending. So, I mean, so what you do now is a loan officer or loan originator, right? Can you get right into loan originating?
Yes. So you can. I personally am of the thought that processing kind of helps you get ready to do it.
Right, that's what I was thinking.
Yeah, because you know what to look for. I worked for a company one time who he would not allow anybody to come on as a loan officer. You had to start as a processor.
Okay.
So I do think, because in lending, the most important part of the whole process is the application. So basically, whenever a customer calls me, says, hey, I want to buy a home, and then we get all the information from them, having a complete application from the beginning just sets the stage for everything. It's kind of like when a real estate agent goes and has those initial conversations. It makes such a difference. And so I kind of know what to look for and ask because of that.
You nailed it. Your side of the fence and our side on the real estate side is it's a people business.
Yes.
It's about relationships and people.
Yes.
And let me ask you a question then. So psychology background, educated in it, working with people, being on the front line. It's a very emotional process, right?
Yes, it is.
So how do you start your conversation with a new client?
Well, so, obviously introductions and kind of get an idea of what it is they want to do, what their plan is. Because, sometimes people just don't know. They don't know what they want. They just know.
For all the realtors out there listening, your lender, your originator, your loan officer partner, they want to get into conversation as soon as possible, right?
Yes.
Because to us, we know sales prices on the real estate side. We know sales prices, closing costs, incentives, and things like that. But at the end of the day, the true motivation for some people may be the final cost of the home.
The numbers,
But most of the time, people are motivated by affordability and what their payment is. And that's something we're not licensed to talk about, and we shouldn't be talking about. Loosely, you know, but so, and that's where that part comes in.
Yeah. Well, I've had a lot of people lately who have said, well, my payment online said it should be this. And I was like, so where did you get this information from? You know, get into the nitty gritty of, you know, people's credit scores and how that affects the payment and all of that, which you know, as an agent shouldn't. And so that's one of the things that, I mean, you might have just closed a loan for somebody with a customer who might have had an 800 credit score that might have gotten them a payment at this house. And so if you revert back to that payment when you're talking to this customer, it might be over-promising something.
Absolutely right. I remember when I first started in real estate, I found that to be kind of a disconnect, right? So I remember talking to my trainer and the person that mentored me and saying, you know, these folks are motivated by the payment, and they care about interest rates and things like that, but it's a payment. My world, I can't, I'm not comfortable. And I remember she gave me this little number to use, and I'm looking back like, wow, I shouldn't have did that. But she was, at the time, you know, rates were different, but she was like, take the sales price times 0.0065 or something like that. And so I'd say, and I would disclaim it, and I would say to people, I'd say, very loose, I'm not licensed for that, just very kind of loose estimate is, you know, $950 a month. And I look back at that saying, oh, that was kind of dangerous, because although I disclaimed it and everything, that was probably not my role.
People don't remember disclaimers. They just remember the numbers you said.
Mike said $950 a month. What the heck?
Done.
But they get their information from all kinds of different places and online calculators and all that. And that's why, you know, always very important to talk to lender right away.
I agree.
What are some challenges? We'll talk about agent relationships too, but what are some challenges you're having with the client side of things? Communication, education, anything like that?
Yeah, I think that a lot of times people are they're so afraid, I think, to have that initial conversation, you know?
Do you think that some people haven't went down the road of a home purchase just because of the fear of the unknown?
Yes, I absolutely do.
I agree.
And so I try to put myself in this position, which, you know, we do this every day. So we don't think like the typical consumer buying a house. I mean, and that's just the truth. And so that's usually part of my initial conversation with the customer. I'm like, listen, this is not like buying a t-shirt, right? I mean, you can't just get it home and you decide I don't want it and you return it. Like, this is a little bit bigger of a deal. And so I understand that. I get that.
No lemon laws, no return periods.
Yeah, like I'm sorry. And so, you know, I think it's just that initial conversation. And, you know, people, especially people who are kind of in the avenue of working on credit, or they're afraid of, you know, having a credit pool or whatever, that it will affect my credit score, and all of these things that I think make it a little bit scarier. I realized that, like, when I went to go buy a car a few years back, and I'm just like, oh my gosh, this is scary, because I'm not used to buying a car, right? But buying a house to me is like not a big deal.
No, that's so funny you say that. Like, you know me, and I kind of too much maybe go through cars. But every time I go to the car dealership, you know, I'm a broker of a real estate firm. You know, maybe like the equivalent of, like, the sales manager there, and I should be pretty confident going on in a car lot. Like, and not diminishing anybody in the car business at all, but, you know, they're doing 30,
you
40,
feel like
50.
that's the equivalent of, like,
I feel like, oh, I should know my way around, but that is completely a different world.
It so is.
I was looking for a car one day, and I went to one of the dealerships, and I went to talk, and I said, hey, I want to see this car. And the guy goes, he wasn't going to get me the keys until he ran to finance first. And I was like, wow, okay, all right.
Yeah, it was, well, my car story is that I really thought a lot of myself, right? I was like, oh, I have a good job. I'm making decent money. I called my husband and I said, listen, you don't have to sign for me. I can go and sign for myself. I've got this, blah, 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 blah. Well, so my friend ran the dealership at the time. And so he came back after I gave him all of my, you know, my social to run all that. And he said, Heather, you need to call your husband. And he said, because you're literally a ghost. You have no score at all. And at that time, I was so novice that I didn't consider the fact I had just paid off a bunch of debt.
Mm-hmm.
That meant I no longer had anything on my credit. And so I literally had to call my husband and be like,
I need you.
babe, can you please come sign for me? I'm a big girl, but I need your help.
You know, that brings a question up on what you do and the things that you see. Mm-hmm. You mentioned no credit,
yeah.
you know, and the average American is chasing a credit score and trying to build that. And unfortunately, the way our system is set up, sometimes you have to have credit in order to have a credit score.
Debt,
You could have, you know, $500,000 in the bank and paid off your house and cars and everything. You try to get a mortgage loan.
Right,
You might
it
have
hurts.
an issue.
Yeah.
So what's the real deal with that? Like, should I be chasing a credit score if I want to buy a house, or should I be you know what I'm saying?
Yeah, it's so hard because I literally say everybody is different. So, I mean, it's crazy to me. I can literally have a husband and wife, same debt load. Everything is the same. They're both joint. And inevitably, usually, one of the spouses is significantly higher than the other one.
Yeah.
And, you know, then it becomes a competition. So even though you have the same debt at the time, it's when that credit history starts. So like if you have a kid who, you know, at 18 years old, their parents co-signed for them on a credit card, and then at 21, they might have a better credit score with the one credit card than someone at 30 years old who hasn't been establishing credit. So, I mean, it's just one of those things, is that kind of the rule of thumb. And this is hard for a lot of people who are that situation. Like, I don't believe in debt, you know, but a credit history is just that. You have to have a history of making payments on time to establish that credit.
Okay, so what would you tell like an 18-year-old, just, you know, college level, or maybe just starting out in the world, and buying a house is a goal of mine in my future? I don't want to get a bunch of credit cards. I want to do the right thing, keep my debt low. What would your like quick advice to somebody in that position right now be?
Yeah, I mean, the easiest way to get a high credit score is to be starting fresh, like not being up against lates or anything like that. You're starting fresh and clean. So what I would say in that scenario for someone, get a small secured credit card that reports to the credit bureaus, put gas on it. You know, just keep a $10 balance on that account revolving, and you will see a boost to your credit score.
So you don't need to go buy your
quickly.
groceries on credit and use all your credit card.
No, I mean, you're just establishing it and setting that history. And a lot of people that I encounter, they say, well, I pay my bills on time. But if your credit card is maxed out, then you can run the issue. If your credit card's maxed out, then you actually can hurt your score in that way. So even though you make your payments on time, that doesn't necessarily mean you're going to have pristine credit. The rule is keep that credit card 30% or under what the max balance is. So if you have $1,000 max balance on your credit card, try to keep that $300 and under.
Great advice. So even like young person, maybe like a Kohl's credit card, buy a couple pairs of pants on it, make payments on it. They give me a, you know, $5,000 limit. I don't need to be touching that.
No. You want to try. I mean, really, the best goal is to keep it $10 or under. That's like the magic number.
So that's great advice.
Yeah. I mean, you don't want to just get a credit card and just let it sit in your drawer and never use it, because that doesn't do anything for you.
How about this? How about I got an 850?
That's beautiful.
I can still not qualify to buy a home, though.
Correct. So what I like to think of it as, and when I'm training other loan officers, I try to say it's like 3 tiers. So we look at credit, we look at income, and we look at assets. So credit being like your score and your debt load. We look at your income coming in, and then we look at whatever assets you have. So checking and savings, funds that you can pull from that you may need to for reserves for your monthly payment, or to put a down payment down if you have to. So those are the 3 things we look. It's one of the 3. So it's a big piece of the pie, but it's not all of it.
Again, different than maybe like the car world. I can go to the dealership, I can have an 850 and tell them I make $200,000 a year. They're like, what car do you want?
I mean, it's basically whatever you say you make on papers. But with us, you can't just tell us what you make on paper. We actually have to see it documented. And
something we've both experienced on both sides of it is they will find out.
Yes.
Somebody somewhere will find out. It will come out with, what is this monthly payment here that's not on your credit report?
Yes, always, because we have to go through those bank statements.
Let's pivot over to my side of the fence on the real estate side, and, you know, agents that may be curious on what happens at the back end, how to work great with a lender. We have a mutual friend. I remember I started with Andy and Lo, the American Security Mortgage, and it was
I processed for him back in the day.
Okay.
Yeah.
And I attribute him to a big part of my success is I had a good team and I had somebody that I could ask questions to.
You trusted,
and we've talked about this a lot, and I've always said, he's like, Mike, we got to get these folks through desktop underwriting. And I'm like, what's that?
Yeah.
Not to make me a loan officer, but so I can speak more intelligently about it. But working with agents, what would be the number one thing that you want an agent to know about what you do? Or the first thing, or don't do this, or say this or that.
Yeah.
What is the one thing that you wish that you could speak through the licensed agent's mouth?
So my pet peeve is usually, and I understand this when you're a newer agent, you don't want to tell people you're not going to show them a house.
Yeah.
You want to, but showing people a house before they get approved to know what they'd qualify for.
Yep.
And that's the thing, like customers, even if they qualify for the house, on paper, it might not be the payment they want.
Right.
So that's kind of my number one pet peeve and it's not even because I can understand, I get it, but it's one of those things you don't want to ever over promise and under deliver ever. And so if you're showing somebody something at $400,000 and their payment they want is at $200,000, nothing at $200,000 is going to look as good. And that's where it goes,
Always a hot topic. And here at Coldwell Banker, we work with new agents quite often, and we have many training classes and discussions on this. I like to tell them it's a balance, because on one end of it, we don't, not us, a lot of people think it's because we want to protect our time, and we do to an extent, but we also don't want to get you in a $400,000 house and then find out you're $200,000. We want you to talk to a lender soon, for us, for the client, for you, for everybody involved.
And try not to quote numbers as much as is possible.
All right, so that's your pet peeve thing.
Stay
in your lane.
And that's the thing, because I do, like, in all these years, I try to as well. Because I am not a licensed real estate agent, so I am not going to be looking at telling somebody, well, you should negotiate these terms. No, like, that's not me. And so I do try to stay in that, but try to communicate with the agent as well, so they know the conversations I'm having with the customer, and then I can know what they're having too. Okay.
What are your biggest challenges right now as far as just the overall real estate market? And I'm sure if anybody's, when people are tuning in, it's like they're thinking rate reductions and things like that. But, one of our mantras here is that rates aren't that bad when you look at the historical part of it. But what would you say the biggest challenge on your side is right now?
So I am talking with a lot of first-time home buyers, and right now there's not a huge...
I'm sorry to interrupt you. So you said you're talking to a lot of home time, because a lot of the news articles, a lot of what we're hearing, that first-time home buyers are like, I'm not doing this yet.
No, and I'm talking to a lot.
Okay.
So I think, kind of what I have seen in financing all these years is if you see maybe 0.25% change in rate, people start coming out. Like that's just enough to get people a little bit happier about buying.
Sometimes even just the news of a potential rate reduction gets people out of the woodwork.
That gets people excited, because it's kind of like Labor Day sale, I mean, and so I'm having these conversations with these first-time home buyers, and the market isn't there necessarily for a plethora of houses at what we would have considered 5 years ago a first-time home buyer price point, right? So I'm having to have conversations with people. What does this house translate to in this payment? And I'm seeing a lot of first-time home buyers having to gravitate towards a higher price point than they anticipated. So those are the conversations that we're having to have. And even people who are not first-time home buyers, it's the payment. It still always goes down to the payment. And yes, the rates have come down. It's been significant since the last year and a half that they've come down. Significant.
Well, we heard at our business meeting yesterday, we heard that somebody got 4 something.
Which there's all these scenarios and stuff, but we were in high 7s in a lot of cases just a couple years ago. So, it's a significant shift right now if you're looking at it based off of that. But it always comes down to payment. And because we all know the rates went up, but also house prices went up
Yeah.
at the same time. So, I mean, that's just one of those things. It's just having that conversation. And people are like, the initial thing is, oh my gosh, I wasn't expecting that payment. And then I'm like, okay, think on it, sit on it. And then usually they call me back the next day. Okay, I'm okay with that.
Yeah.
You know, that's usually how it goes.
Just some background on that for any viewers is that 15 years ago, we started seeing rate reductions to the fours.
Yeah.
And we had a good buyer's market, very steady buyer's market. And then between then and right pre-COVID, things started balancing a little bit. We got maybe closer to a seller's market, but North Carolina has always been, and especially our area has always been known as very affordable housing, moderate sales prices. And we didn't see incredible spikes in appreciation. And then, as everybody knows, COVID came.
Yeah, and COVID came.
And I talked about this in my last one. When COVID came, I really thought, like, man, is Walmart going to be higher? And I thought we were going to be down.
I was thinking of all these options. Yeah.
And then the buyers came out of the woodwork. We were low in inventory, which pushed prices up.
Yes.
Economic issues because of COVID pushed, inflation and jobs report, all this.
Go to the grocery store, and
so we were closing houses at 2%, 3%, 4%, and we had young folks getting in 3,000 square foot new construction homes for pretty cheap. Post-COVID, things have stabilized. So a lot of people think prices are going down. I disagree.
I agree.
The appreciation
they're not going up as quickly.
And then rates. And then we battled rates again, and they went up to 7s. And we were telling everybody, hey, this is the 30-year average. So we're in a place now. I didn't think we would see. Now, again, with that scenario, there were rate buy downs. And
significant concessions and stuff. Yeah.
I never thought I'd see somebody getting in something 4 anytime in the
I really anticipated more into 2026. To be honest with you.
What is your projection, your forecast for the lending side of the housing market?
Well, and one of the things that we have to consider, so, you always think there's a direct correlation between just what the Federal Reserve says rates are going to be, whatever. But more goes into an interest rate than what you would anticipate. It's not just the housing market. It's jobs, how many, unemployed there are. I mean, there's so much that goes into it because you think rates aren't going to want to drop till we need some help boosting the economy. That's how it always goes. So economy is staying pretty strong. So I don't really anticipate, and again, I don't anticipate there being anything crazy between now and the end of the year as far as rates just plummeting, right? I think it'll be, if there's anything, I think that it might be a couple little tweaks down, just a couple. I would anticipate a little bit more into 2026.
So you think 2026, significantly into the year,
I think we'll see more significant adjustment because it's the mood of the powers that be, the mood of the people, what's going on in the economy. I mean, because really, rates really should have never been as low as they were.
Right.
And so that's if that's usually one of my questions. Do you own a house? Yes, I do. Okay, when did you buy that? Because if I have to tell them, yep, you're sitting on a 3% and that's not what you're going to be getting, that's a whole other conversation. So it's just, I think there might be a couple little things between now and the end of the year, but probably more significantly.
And we certainly have a lot of different things. I know that nationwide we're still short on inventory, period. We hear about a lot of projects going in around the country with AI data centers and power plants and things like that. But the inventory isn't there, So, but the inventory isn't there. So that's something that people way smarter than me are saying that in 2030 we're going to have inventory issues, which will make it
even more,
which adds another wrench in.
Oh yeah.
So let's kind of wrap up with tell us where you're at, what you do, how to get a hold of you, and maybe a last piece of advice for both a client and an agent.
Okay. So I'm licensed in North Carolina and South Carolina. So I can really, any kind of purchase for a house that you want to make in either state, I'm happy to help. And so you can call me, text me.
And you do refi as well?
Yes, refinances. So for those people who did have a higher interest rate and they want to refinance to get a lower payment, yes, we can definitely help with that. But you can call me. Give my number, 910-308-9717. That's always the best way to reach me. I have it on me unless I'm sleeping, and that's super late. So that's the best way.
again, if an agent is thinking about getting into real estate, your team is very important.
Yes.
And while nobody's in the middle of the night awake, having a lender that's responsive is very important.
It helps life for sure. Our kind of rule is control what you can control. And we can control our communication. So you can reach me there. My tip, I think, is kind of going back to what we said initially, that kind of pet peeve thing. If you're looking at buying a house, let's have that conversation sooner rather than later. Like, let's not wait until your lease is going to be up in a month and we need, to get something right now, because sometimes there's something there on that credit that you didn't know.
Yep.
And we need to look at that. And then for an agent, same thing. Like, if you're having a conversation with the buyer, get them to speak with a trusted lender very early, because like I said, the team is what matters. And for us, it helps us to work with an agent who's responsive and communicative and present. And the same thing, it all works the same. And I hate to say it, but teamwork does make the dream work.
No, yeah. Well, I always say that, as much as we can as real estate agents is to have a buyer's consultation. If I've got somebody interested, it's really hard not to sometimes, but get them off of the car lot, so to speak.
Right.
And let's talk about their needs, wants, desires, and make your lender a part of that package. Bring the people into your respective office, talk to them, have the lender stop by. I know these ladies would love to do that. And that way we've got a game plan. Everywhere else in the world we plan for things, and sometimes in real estate we're reactive. And while it's hard when somebody's outside the house with your for sale sign and calls you and wants to see it, and we don't say no, we go show them, but we've got to integrate that buyer consultation in there, and the lender's got to be a part of it.
Right, for sure.
So, awesome. I've really enjoyed it. We're going to do some more, because I feel like there were some topics that we could have had a whole entire video. We could probably talk about the Fed. Yeah. But so Heather, her information is there, and we'll have it on the screen. Give her a call. And I'm Mike. I'm the broker in charge at Coldwell Banker Advantage. You can always call me for any of your real estate needs, and I will get you linked up with one of our 120 top tier agents here in the greater Fayetteville market. Take care and have a good one.
Bye, guys.
Cool.